It's Tuesday, the 28th of January, 2025, and this is Market View, your pulse check on the stories that shape the markets, as well as the industries that are around us. Here's what we are diving into today. We begin with a story signaling fresh opportunities for local businesses. Interest in the SADC European Union Economic Partnership Agreement is gaining momentum, as evidenced by a packed training session at Sibane Hotel. It was facilitated by SADC's Mike Sheyavali. This initiative that seeks to empower Eswatini enterprises to fully leverage a deal that is signed back in 2016. But the question remains, are local businesses prepared to seize the moment? That is the big question. We also have our Enterprise Watch. Our journalist Nelson Nlangamandla sits down with SADC's Hilda Meliofe for a detailed conversation on the gaps that are preventing full utilization of this trade agreement. What are the hurdles, and how can businesses pivot to capitalize on this particular framework? Finally, market analysis. Sana Lesbia rounds out the closer look at today's rates, as well as the factors that are shaping the trading environment today. All of that and more right here on Market View. Let's get started.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. We get started by looking at the business news making headlines today. The first one speaks to the services at the Ngwenya-Oshuk border post that are slowly being restored, a message that is being sent after a temporal closure that happened on Sunday following a truck accident that happened on the South African side. And therefore, in Eswatini, the Revenue Service requested cross-border traders and travelers to use alternative border posts. We spoke to some of the drivers that were affected by this particular development, who shared their experiences of the services today.
The Ngwenya-Oshuk border is one of the busiest between South Africa and Eswatini, with over 600 trucks passing each day. The truck accident, which happened on the South African side on Sunday, affected trade as trucks were not able to use the border. Today, business has slowly resumed as truck drivers and travelers were seen using the border.
I was supposed to be here like yesterday morning, but I had to wait in Joburg, waiting for the gate to be cleared. Yeah, but when I got here, they were fast. When I arrived here, trucks were freely moving.
Comparing to this one with the other southern region borders, this border is a bit nice, and the services, I think, if your papers are nice from SA side, you just no more queues, no more too much lines. Like if your things are in order, you just proceed into Swaziland.
It was easy today. Yeah, but once they complete, it will go back to normal. Today they are faster because I just spent 1 hour.
Sitembile Shiba from Classic Clearing Agent says her business has been severely affected since Sunday. She says she usually clears about 15 trucks, making around 1,000 emalangeni each day. She says the past 2 days have been very challenging.
Business ye mangalo ukuthi imithwalo ayisahambi. But itole ekseni ngabo 8 bathi hayi stockkeeper lawa bewasolalela bhodo emva kwaloko siyavala. So saphathamiseka lokusebenza because besinganasholo ukuthi sisebende noma sime noma simikise kulamanye amabhoda, because mawuyisa kulamanye amabhoda la customer atondleka kakhulu le mali because ikhashane angibekise nje uyophuma emahamba kephuta embabane. uyakubona ukuthi le mali lo sotoyisebenzisa ingakanani because sokufuna usuwele bonhlangano ubuye embabane seyilosi le.
The Eswatini Revenue Service says the travelers lane has been fully restored. The communications director Ndobeko Dlamini says they are still waiting for information from the South African side to find out if the commercial lane has been restored too. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
Local businesses have shown interest in trading under the SADC European Union Partnership Agreement that the country signed in the year 2016, as evidenced by the attendance in the training on the agreement requirement at Sibane Hotel. Mike Shervali, from SADC, says they are conducting the workshop to ensure that local businesses take full advantage of the agreement.
We have taken advantage as EMI of this agreement by exporting the 500 tons quota to Norway that we have, and also we've also exported to Taiwan. So in a nutshell, in a month we're sending 4 containers, 3 to Norway and 1 to Taiwan.
Yes, Nisela Farms is looking to export under this agreement. We think it's a very good opportunity for Eswatini and for ourselves, small rural farmers where we are at Nsogo, it's normally rural. With the help of the Taiwanese, we set up a big dragon fruit orchard where we can grow dragon fruit, and we are looking to import into South Africa and into the EU.
Jabulani Mkonta from Plant Protection at the Ministry of Agriculture says they support local businesses who want phytosanitary certificates in readiness for exporting.
Yeah, we issue quite a number of phytosanitary certificates per day. These phytosanitary certificates are for plants and plant products. So we've got a wide range of plant and plant products, ranging from timber, from fruits and vegetables. We also issue phytosanitary certificates for animal feed.
The Ministry of Commerce, Industry and Trade has said it will do a lot to help local businesses benefit fully from this agreement. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
That's it for our business news. Let's go for a net break. We have our Enterprise Watch when we come back.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m, where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back to Market View. If you've just tuned in, you are tuning in at the perfect moment. This is our Enterprise Watch segment. Local businesses have not been able to fully take advantage of the SADC EU Economic Partnership Agreement. Now, this has led to SADC working with the Ministry of Commerce, Industry and Trade to train local businesses on the available opportunities around our business landscape. Journalist Nelsiwe Dlangamandla sits down with Hilda Melufe from SADC. They unpack the contents of the agreement.
Hilda, it's a pleasure having you on the show. We just want you to unpack for us the SADC EU Partnership Agreement. What does it entail?
Thank you so much for this question. The EU SADC EPA, that is the Economic Partnership Agreement that SADC member states, that is SACU plus Mozambique, have signed with EU. The agreement entered into force fully in 2018, and this agreement it offers quota-free, duty-free market access to 5 of these SADC EPA states. That is for Botswana, Eswatini, Lesotho, Namibia, and Mozambique. And this means that whatever an exporter produces and intends to send to the EU market, they will not be restricted in terms of tariffs, and they will not be restricted in terms of volumes. That's the important part for exporting under this agreement.
For a business to trade under this agreement, Hilda, what is it that they should have? What are the requirements?
For a business to be able to export to this market, first and foremost, they need to be compliant in terms of the rules of origin. They need to indicate that whatever product they want to export to the EU originates within the SADC region, within this region of Saku and Mozambique. They have to have proof that the product that's been produced in this region, not whereby you export something from outside the region, you bring it here and then you export to this market, because of this benefit of duty-free, quota-free. So it's important, critical for exporters to make sure that whatever they export there to the EU market is produced within the region.
We heard that you did a needs assessment study as SADC. What are the gaps that you found in Eswatini?
From the beginning, in 2016, and then I think in 2017, 2018, there was an increase in terms of exports from Eswatini to the EU. However, there was a decline during that period of COVID, which I think it was due to the restrictions that were put in place in terms of movement of goods and people due to the COVID pandemic.
Some businesses that may want to trade under the agreement, Hilda, may face challenges of costs because most of them are not at a level where they have enough money to export. Is there anything that you are doing to help these businesses? Are there any specific products that you are looking for under this agreement?
All products, as long as you can produce, you are an Eswatini producer, whatever product you want to produce, as long as it meets the rules, like I said, rules of origin, the origin is from the side, as long as it meets the requirements in the EU side in terms of SPS and all those health, plant health, plant and animal health, as well as food safety principles. As long as whatever product you produce meets those standards or principles, then the product is set to go.
In terms of volumes, in terms of numbers, how much has Eswatini been able to export under the agreement since the year 2016?
In terms of values of exports from Eswatini to EU, there has been a decline because if we use 2016 as the baseline, when the agreement entered into force, Eswatini, the value of exports from Eswatini to EU was 115.26 US dollar. And then in 2017, it went down. It has been fluctuating. 2018, then 2019 there was an increase. 2020 there was the value was very high. However, in 2021 there was a decline, which, as I have already indicated, it was due. We take that it was due to the COVID pandemic. But you can see that there has been an increase, although there has been an increase and decline as the years went by.
What form of support will you be giving Eswatini going forward so that all businesses that are interested in this agreement can be able to take advantage of the opportunities?
The main intention of this workshop is to capacitate Eswatini on food safety principles, right? And then after that, or during this workshop, we are going to come up with an action plan on how Eswatini can implement the SPS measures going forward. So we want to come up with an action plan with the assistance of the public officials in the meeting, as well as the private sector, where they come up with an implementation plan of what we intend to do going forward in terms of now implementing the SPS principles as a country. So I believe that if there are any needs, they're going to be indicated in the plan. And then if there's any need for support in terms of maybe finances, or like we are here because of the support we got from EU in terms of finances to come and train member states, including Eswatini. We got the money or the funding from EU. So what we are going to establish from this workshop now going forward, Eswatini has to indicate that we need this and this and this and this. And then as Secretariat, we discuss with our, we call them the international ICPs. Yes, we talk to our ICPs, international financing partners, now to pitch to them and say this is what we have established when we're doing our training or our capacity building or trainings around the region. These are their needs, and this is the support that they need, and then we check and see if they are able to support.
It's been a pleasure, Hilda, having you on the show. We know that you are currently training our businesses on the opportunities under this agreement. We are hoping that you'll also talk to us about the resolutions after this workshop.
And that is our Enterprise Watch engagement there with Nelsi Ndangamandla, our business journalist, speaking on the SADC-EU agreement, unpacking its implications into our local economy. We have Sanele Sbia waiting on the lobby for us when we come back from the break to decode all things, the rates of the day and why they matter for you as you trade.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
This is our market analysis on Market View, the Tuesday edition. Sanele Sbia is online now. Sanele, welcome to the program. A very good afternoon to you. Let's look at the latest market rates today and what are the key factors that are driving these movements?
Thank you, Mr. Ngumalo, and good afternoon to the viewer. So what we are seeing in the markets, more especially in the US, following my yesterday's trading session is, there's a bit of subdued activity within the market. So that's attributed to that 10-year bond yield on an upsurge. What the markets are telling us is investors are just looking for this bit of certainty in the market. They're just looking for some certainty within what we would call, that money market investment moving into those bonds, because there's a lot of uncertainty that is being brought about by the Trump presidency. We're seeing policy moving all over the place. We are seeing moves, towards curtailing OPEC. We're seeing moves towards, somehow dictating to the Federal Reserve Bank what it should do. So all of that is throwing a bit of some cold water onto the market. So what we're seeing, though, is also the Nasdaq Composite Index, which is also heavy on those tech stocks, is also now trying to rebase and see what is going to happen with regards to that China AI revolution. We've seen China just coming out to somewhat disrupt markets as we've been looking at the tech sector moving and pulling those stocks forward. But on the reverse, we're seeing the Dow Jones Industrial Average, which it houses quite a number of stocks which stand to benefit from the Trump policies on an upsurge within within the US market. So we're seeing those are sectors that will benefit from the rattle that Trump brings to the markets climbing up, and then we're seeing the Nasdaq being affected by that AI revolution within China. And when you look at the S&P 500, you can see that it is actually being affected by that 10-year bond yield and that uncertainty around the interest rate trajectory now that President Trump has returned to office. So that's what we are looking into in the markets today within the US. Otherwise, it's quite a gloomy day. But when you look into the European markets, we can see when you look into London, you can see that the FTSE 100 is up, just merely gaining what it lost yesterday. When you look into the DAX again, it is up again, merely also just regaining. What we're looking at when you look into France, you can see that we are now on that 7,943.6 in terms of all trade volumes. So what we are looking into right now is, we do expect France to continue that upsurge back to that equilibrium of 8,000, the levels that we were seeing before the elections and before that political quagmire started engulfing France. And then when you come back into Germany, we're seeing, though the German market remains weak, but investor sentiment remains relatively upbeat, even though we do know that the German economy does need to find new sources of growth. Otherwise, it's poised to become Europe's weakest economy in the near future. And then when you come into London, we can see there's been some sort of rebound. Even though that China story is playing into the markets, more especially into London. But do remember that a couple of weeks ago, Sir Keir Starmer, the Prime Minister in England, came out to really say that they are going to have this huge boost towards artificial intelligence. So that is what is now holding the markets together. And we've seen the miners rebound a bit on today's trades, so pulling up that trade. However, there are still some weaknesses that we are noticing within the UK economy, and it remains to be seen how Sir Keir Starmer policies are actually going to aid in bringing back the UK economy back on track. Then going into the mainland, we can see that into China, into Asia, what we are seeing there in Asia is again, some mixed reactions with the Nikkei leaning towards and learning from the US markets, because there is that uncertainty that we are seeing happening within the US market. And we're seeing the Nikkei, the Japanese, also bracing for impact and bracing for that uncertainty, just to see how the markets are going to move in the US, and just to see if the US is actually going to recoup those gains, or it is actually going to be at a point where we are moving on with the uncertainty. So also that uncertainty around the interest rate path, because we are coming into the 29th of January tomorrow, and we do expect Mr. Powell, the Federal Reserve Chair, to come out and give us his final stance. Though we do expect some marginal cuts, but not as big as one would have opted for, because now they have to be a bit cautious around those Trump policies. So we've seen that a bit that hawkish stance returning into the Federal Reserve Bank. But when again you move into the Shanghai Composite, when you look into mainland, you look into Beijing, again, there is a bit of that apprehensiveness regarding what we expect the US to do, although we're seeing some marginal losses, but still staying at the 3250.60 mark. And then that goes to show that, attainment of that 5% growth target really just beyond markets within the mainland. And we're seeing the Hang Seng, that's the Hong Kong markets, not just getting a bit. But one interesting note about this market, Mr. Ngumalo, is it is still struggling to return to pre-pandemic levels. Those levels of 23,000 that we're seeing before the COVID pandemic. That's purely because post the pandemic, we saw the mainland putting more restrictions around that semi-autonomous region, which is Hong Kong. We've seen quite a number of security, laws being affected within Hong Kong. But right now it's sitting there at around that 20,000, but still struggling to get back up to that 23,000 region, purely because of those issues that we're mentioning in terms of those security concerns and the mainland really pushing forward towards regaining and taking that market. And then coming into South Africa, what we are seeing there again is, just a bit of growth coming back into the markets, just a bit of optimism, right? Because as it were, remember yesterday we did say that there's a couple of tests that we are looking into for this government of national unity. The first one being, you remember that contentious education reform and that land reform. So we've seen President Ramaphosa go against the DA and making those into law, trying to appeal to his traditional base or the traditional ANC base. And now that's a test for the GNU just to see if it is going to hold or not. And then markets are reading into the fact that even though it has come into these have been signed into law, the land expropriation without compensation for government uses, that's been signed into law and the GNU is still holding. And again, there is that education sector bill. So we should see a bit of volatility in the market in South Africa, all settling around that GNU as we move closer to the SONA, and if we are going to have a SONA. And also markets are looking to see what the GNU is actually going to do about public state enterprises and, just trying to fix the issues that were there. And then remember, again, there is that issue of the minister in the presidency who's actually being accused of corruption. Again, another sticking point that might force the DA to pull out of this GNU. So markets are going to be volatile, Mr. Nxumalo, within South Africa as we move towards the State of the Nation address and then the budget. So there's going to be a lot of wait and see what is actually going to happen there. Then domestically within Eswatini, we have not seen any changes in the markets. We're still remaining at that 489.12. And then coming into the gold markets, into commodities, we can see gold has actually just edged up a bit by some 10 points in today's trade, moving into the $2,748 per ounce type of region. And that's purely because of the uncertainty around what's happening in the US and, the monetary policy trajectory. So gold, is one of those hedging tools that investors use. It's either they're going to use bonds or they are going to use gold in itself. So that's why we're seeing that marginal gain. And then oil continues to be on that downward spiral, heading for that 75 mark. And right now, we're seeing $76.43 per barrel in terms of the international standard. That's the Brent crude standard. Again, because President Trump is just signing executive order after executive order and using the fiscal power to force inflation to come down by forcing energy prices down, either through directly threatening OPEC or saying we are going to drill baby drill. So we should see the price of Brent crude coming down closer to that 75 mark, and it should stabilize there for a bit of a while, and might actually even go down even further to that 70, the lower 70s. That's what we should be seeing, but 75 would be our strongest bet. And then coming into the currencies, because of the uncertainty in the US, and the fact that the GNU still holds, albeit the issues that we're seeing, we've seen that the local currency has actually gained across the board, trading at $18, at 1:18, emalangeni 67 cents against the dollar, at 19.47 against the euro, and at 8 emalangeni 31 cents against the Japanese yen. So we're seeing that relative strength being driven by that GNU holding up type of wave. Thank you, Mr. Ngumalo.
Sanel Lesbia, thank you so much for your time, your insights and analysis. As always, your perspective adds perspective to our understanding of the market dynamics as they are. That's the end of our show today. Thank you for staying with us. Enjoy your afternoon. Bye-bye.